There really is a lot to talk about when it comes to opportunity in investing in the European market. As I've mentioned, you can focus on geography, Spain, Italy, say, versus UK, France, Germany. You can focus on asset class, hotels versus office, retail versus logistics. All of these differences, either in geography or asset type, will yield different kinds of opportunities depending on your risk appetite, the duration with which you wish to be invested, and generally the amount, size, and type of capital that you're deploying. They all represent excellent opportunities. Clearly at the moment in Europe, having come out of the crash that followed the Lehman filing and then the prolonged sovereign crisis that has followed, as well as the ongoing restructuring of the bank market in Europe, all of these have led to various kinds of distressed opportunities in the market. When we talk about distress, we really talk about two kinds of distress, either distressed sellers or distressed assets. What do we mean by distressed sellers? Distressed sellers really means someone who can no longer afford, who no longer wants to hold a particular kind of real estate asset, whether it's a loan, a company, a property, or whatever. Specifically, a bank that is got too many loans on its balance sheet that wants to sell them, whether performing or not, because it wants to reduce its exposure to real estate. The assets may be perfectly good, but they may be selling at a discount and in volume simply to help the bank change the structure of its balance sheet. A borrower, great portfolio of assets, but at the peak of the market borrowed too much money, it can't be refinanced, it needs to be sold. A company, multiple divisions, no longer wants to be in the real estate space, needs to get out. All of those situations, there's nothing really wrong with the underlying real estate. It's a problem of the seller, i.e. the seller is distressed. In those situations, often speed and certainty of execution are more important than price, and someone who's there able to execute in the marketplace quickly and efficiently can take advantage of an opportunity to move the assets from where they are to their own balance sheet at attractive pricing. What's the second kind of distress? For me, that's more classical distress. It's actually where the real estate assets aren't performing well. What may lead to that? It can be as simple as a homeowner who can no longer afford to pay their mortgage. It can be a real estate company that has underinvested in its assets and now faces a rising cost of debt and can't afford to make the capital improvements or the investments in tenants or tenant improvements that are required. As a result, the asset has declined, its competitive position has diminished in the market, and now, frankly, the real estate is struggling. Any of these situations, which are more and more common, can result in an opportunity to buy the assets at a material discount to their ultimate value, provided you have the financial strength to reinvest and reposition, whether it's by buying a large portfolio of distressed first mortgages where the borrowers aren't paying and you have the ability to hold them, enforce them, reposition the real estate if necessary, refinance and sell, or whether it's a case of buying assets that have been orphaned or unloved or underinvested, putting the capital into them, repositioning them, and ultimately taking them back to the market. Clearly, you need the financial strength and the fortitude from a risk point of view to do it, but obviously if you can do that, as the market recovers and liquidity returns, if you buy these assets at the right price, the opportunity can be enormous. In terms of specific opportunities, we're looking at both the income space and capital appreciation. In the income space, our first focus is on a debt fund where we think there is and will continue to be an opportunity to make both first mortgage and mezzanine investments. Focus on capital appreciation really has a couple of themes to it. First of all, more opportunistically, there is a steady flow of larger transactions looking for capital, and we're attacking those one deal at a time, positioning the deal and the capital together depending on the nature of the deal. That can be a portfolio of distressed loans in Spain or Italy. That can be a large hotel portfolio in Germany. That can be a company that needs its balance sheet restructured. All of these of these things are ongoing at the moment and do represent good opportunities over a 3 to 5 year horizon.